The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the June 5th magnificent Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find that gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. You can always send me an email, steve@tfn.com. Please put in that heading line, radio show question. Of course, inside the Tiger's Den, any ping will do. So let's go ahead and get this show kicked off on Magnificent Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow traded up 4 points. Really a flat market out here. The S&P 500 is flat. The NASDAQ 100 is off 3 points. The Russell's down 3 points. Semis are up 3 points. New York Stock Exchange down not even 0.1%. That'd be about 11 points. Gold is up $2. Silver's up 4 pennies. Volatility index trading out at 962. The spot volatility index, that's down 13 pennies. To the upside, you've got Loxo Oncology up $24 or 50%. They've cured something. Bluebird Bio up nearly $9 or 11%. Google trading out right now. Well, you've got the two different shares, one at 1,002, the other at 982. Puma Biotech up $6 or 7.5%. Wex Inc. up 5%. Amazon trading out at 10,000. Well, one of these days will be trading out at 10,000. Today it's just 1,000 and two buckaroonies. 1,011. Buckaroonies. Buffalo Wild Wings is the biggest loser to the, and I say biggest loser, I mean dollar-wise, to the downside, off $9 or 6%. Tesaro Inc. off $7, 4.5%. Insight Corp. down $6 and change, that's 5%. Charter Communications off 6, Chipotle off 5, O'Reilly Automotive off 5, Herbalife down 7% or about $5 to the downside. Where do we begin on a slow market such as this? Well, I guess where we begin, we take a quick peek at the futures contracts out here. Really no information here to be gained other than one piece of information, right? As you take a look at this chart here, you've got the ES Mini in the upper left. You have the NQ in the upper right, the Dow, YM, lower left, and the Russell 2000, lower right. If I were going to ask you, as you take a look at price in these market profiles, which of these charts is communicating something to you and I, which one would you suggest would be doing that? You're exactly right. It would be the Russell 2000. It would be the one that's in the lower right-hand corner. Why? Because today or earlier in the day, what we saw is, well, first let's take a look at Friday's action. Thursday's action, huge move. One big wide-ranging bar coming into the top of that market profile. Now, if you take, let me go ahead and explode this up on the screen. Explode's not the right word. We'll blow it up on the screen. And if we take a look at this structure of this daily profile, both you and I would conclude that it really is the sellers that should be in control of this price area, which takes you between $13.99 and $13.49, so a 50-point area. The reason we would say that is because the center of the box is priced at $13.82, closer than to the bottom of the box. So it's closer to the top versus the bottom. That says that is where a strong resistance line should have been, could have been. Not anymore. In fact, price closed above it on Friday, and today has been a test and rejection of a resistance zone. No, I do not, you do not know where price is going to close today. But watch for a close above $13.99 because that would be suggesting to both you and I that the Russell 2000 wants to go ahead and move higher. You might say move higher to where? Well, then what we would do, both you and I, is we'd go take a look at our weekly profile out here. Now, 1414 is the number that shows up here if I just take a look at the June contract. And that may indeed be the number, but Stevie likes the synthetic contract here just because there's more time, more data. More data is better for us. And in this stage here, the interesting thing, when we take a look at more data out here, what occurred last week was an actual close above a weekly profile high. That price being $13.97 and change. Right now we're trading at $13.99. So you've closed above. Now, yes, and by the way, last week was the first time we've seen the close above that. So the weekly and the daily profiles here in the Russell 2000 are suggesting to you now that there's a real breakout going on here. Very interesting. So that's what we really know about the markets if we take a look at the equity futures contracts, which is very helpful to you and I, engaging which side of the market to be on or consider being on, and which side of the market to not consider or has not confirmed, right? So what side does this say to you? Which side should you be on in the Russell 2000, the week indice out here? No, there's no vodka in that glass. It's just water and lemon out there. The Friday could be a different story. Just kidding you. Let's go take a look at what else. So if we step away from that and we go to our next set of tools to try to identify what the markets are doing here. Obviously, this was squashed together. This being the New York Stock Exchange. Well, I'll tell you what, we'll come back to the New York Stock Exchange chart. But actually, in looking at each of the first three panels out here and looking at the bottom portion of the panel, that being the New York Stock Exchange, NASDAQ Composite, and the Dow, plenty of information here. This tells us that buyers are the ones that are in control. There's no other way to read it. Well, you can read it however you want to, but I will suggest to you there is no other way to read it. With all of those oscillator readings being above zero, that is the way to interpret what the meaning is there. Now, in the case of the spot volatility index, we'll come back to the New York Stock Exchange because it's worth coming back to, whether it be before this break or after. We will come back to it. If we take a look at the spot volatility index with regard to the S&P 500, trading below Stevie's, not mine, it's trading below John Bollinger's band out there. It's a modified version of it, but nonetheless, when you trade below it, that low being 993, and we're trading right now at 993, we're trading at 966. There ain't nothing bearish about that. That is for sure. Can you expect a slingshot? Move off of that bottom? Well, you could. Nothing to get the bulls, and I'm referring to the daily basis bulls, concerned about until you were to see it close above 1135. Let's face it, if that happened today, you'd have more than a 10% one-day rate of change out there, and you know what that means. Yes, that means bounce or bottom. These days, pretty much means bottom. Boy, if that spot volatility index tool isn't becoming most important as we speak right now, because you want to talk about buying the dips out here. Oh, baby, that is a tool to use in buying the dips. But as we speak right now, 1:14 in the afternoon, there ain't any dips to be buying, well, so to speak, out here. When we come back from this first commercial break, I'll check the emails. I'll see if there's any requests out there. And whether there is or there isn't, we're going to go take a look at that New York Stock Exchange. We're going to go see, even with it trading down 10 buckaroonies out here, is it a trading above its zero line? It's breakdance area. It's moved to the stars. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So we're going to take a look at the New York Stock Exchange. We spent quite a bit of time on Friday looking at this, and what we had suggested to you was that Friday's close was going to be very important with regard to the bottom indicator out there. That is a summation of all of the advanced decline oscillator readings. So, and in this case here, you would end up with the same number. If you were calculating as I do, it wouldn't matter. It wouldn't matter where you started as long as you started more than 50 days ago, let's say, or 39 days ago. But the reality is you would end up with the same calculation. Of course, this is calculating live data as well. So it's taking a look at net advancing, net declining issues. It's taking a look at unchanged issues in order to do that. Now, I've modified this, not on this page here, but I myself have modified it where I get rid of the unchanged issues, a little bit of a change in the formula. But that is really confirming what we're looking at here. And that is that in fact, on Friday, we'll just kind of blow it up a bit. You'll see the line kind of turns from green to red. So let's both you and I know whether this line is rising or falling. The first thing is when you're above zero, that's a beautiful thing for the bulls. When it's rising above zero, well, it doesn't get much better than that. So that's an even more beautiful thing. Likewise, when it's falling, yay, better for the sellers. Falling below zero, really much more better. Much more better? Son of a gun, I just probably got yanked off of the air for just saying that. But you know what I mean, what I meant out there. And so yesterday, Friday was a close of June 2nd, 45.70, being that calculation, 82.56 or so, 82.66 as we speak right now. And the reason why we pay attention to it is, look, if you just the last time that we dealt with this zero line or this indicator, this tool, this summation index dealt with that zero line back on January 6th, because as we closed out the year, I take that back, at January 4th, we were down below zero. As we close out the year, we were below zero out here. And as soon as we got above zero, you can see that what happened is it led to higher price. All right. I know all the reasons that people are giving you why price can't move higher. Hogwash, okay, just patootie. Or what, if this gets below zero, then I can join that camp. I can't be in that camp when this is giving us the reading that it is out here. And again, we're just looking at when the summation index is flirting with that zero line. So then to go back to a prior set of circumstances where that occurred, we would go back into March 9, 2016 out here. And you can see March 16th, March 16th out there, if you would use the same approach that you and I are right now, all right, you will see that price, heck, it's still moving higher, but it moved higher out there. Yeah, you have bumps in the road, but as long as that summation is above zero, well, guess what? That is a beautiful thing, especially for more of your intermediate term traders out there that are going to go ahead and take a look at least this tool on a daily basis. Is a very good assistance tool out here. Now, again, flirting with that and what we talked about, that zero line, flirting with that zero line, why Friday was so important was because there are what are referred to as zero line failures. What the Sam heck does that mean? Well, in both directions, but really traditionally a zero line failure is when this tool, this indicator, this summation index gets up like it did on November 5th up to a level of minus 79.80. Looked like things were going to break to the upside, and instead it's a beeline to the downside. Now that's November 5th. Kind of a cool tool to also be able to catch the early stages of a trend. Now we can't trade the New York Stock Exchange. And look, this includes a lot of closed-end funds. Yeah, I'd like to be able to utilize this tool, get rid of all that, and be able to give you a better summation index, but this is the best we've got, and it actually works pretty well. So let's not, let's not be complainers about a tool that actually assists both you and I. Now, it's not like it's blown through the zero line, but in one sense, it is above it. Not in one sense, in every sense, it is above it. And that has with it a fairly good message, a very good bullish message for the markets. Versus if we had seen this take place on Friday, that today would be a whole different outlook. I would be giving you the exact opposite outlook, and we'd start looking for levels of support for where price might fall to. But that's not what we've got going on inside of the market. You can see some other zero-line failures out here. You can come back into the levels back in February 2014. Once price got above the zero line, you can see that price simply continued to move higher. And as long as that summation index stayed above zero, well, that was a beautiful thing. So what's the message right now? It's very clear coming from the New York Stock Exchange. It's nothing more than flat out, all out bullish out here. And as long as we are looking at this, what do we do? I just want to see what the new highs were on Friday. Ended up closing up with 339. You'd still like to see it take out the highs from December 8th, which was 485. The mere fact that it hasn't, is that a big deal? No, not really. You had 339 new highs, and as far as new lows, 26. No big deal. Nothing there to be concerned about. Okay, Michael sent in a question and said something like, Steve, you haven't looked at the GDX for a while. Let me get the exact question. Now, Steve, if you have a chance, we're going to have that chance. Can you talk about GDX? So miners have been very weak, and I was wondering why. So, Mike from Nashua, thanks for writing in. So there's a couple different things that we can take a look at out here. But the first reason as to why they are acting the way they are, let's come here and take a look at the daily charts. Let me change this to a daily time frame. And you and I, we make a big deal about the bottom panel here, the price oscillator. And we make a big deal. This is a different zero line, but it gives you the same kind of context as to what we're talking about. So, Mike, when we see when we see the price oscillator, that's the difference between two exponential moving averages, 13 and 19 and 39 out here. When that is below zero, you're never going to see the market just absolutely fly, or the instrument itself just fly, not unless it's formed a great bottom out here. In this case, it's really trading right at its point of control, market profile-wise. The profile actually is, from a daily perspective, a little bit of a bearish structure to it, meaning that center of the box closer to the top of the box, but not until we see the price oscillator get above zero could it be considered to be out of the woods. Is there anything else that I take when I take a look at this here that's either significant sell, significant buy signal inside the GDX? And the answer is no. It's really more neutral. We don't have any kind of time to mark count. We are trading above Stevie's oscillator on change line, just slightly above that. But the real key is going to be here, let me do this, is going to be what really happens at this, as this approaches zero, as that price oscillator approaches zero. Excuse me. What happens is at this stage, if I could just find the old button-aroo, there we go. What happens at this stage here is when that is approaching zero, you see Stevie's three lines come together. The same thing occurs right at that stage. And watching how price responds then, what you'd like to see is in essence, price move above it, come back, while the price oscillator is getting to zero, and then come back, test it, and reject it. That would be a very bullish sign. That would then say you've got an A to B equals CD to the upside. But until it can, it's just like an athlete. It's just tired right now. It's just been communicating to you and I that it is tired right now, regardless of whether gold is trading higher by $2.40 or not. Why is it struggling? I bet you if we go take a look at the top 10 issues inside the GDX, it looks very similar to this. We'll look at the weekly and the monthly when we come back for this break. Dow's off 99 cents. Right.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's go take a look at the weekly chart here for the GDX for Mike, and this way we can cover, multiple different style traders out here. Now, what this chart, the beauty of this chart here is it shows the both the nice bottoming and topping pattern. The topping pattern is certainly associated with every single major bear market that ever existed out there, and really for every instrument too. At least enough to be able to give you and identify when you're going to see a change in trend. Let's just start right there, because that's really what it does, and oftentimes those will lead into bear markets, especially when you're on longer term time frames. This is a weekly chart out here. We can see that when the bottom formed out here, Mike, this is back in January 2016. Price was moving lower, doing with less relative energy, formed that nice little hammer candle back on January 22nd. Price moves higher, nicely creates a secondary bullish reversal signal. You can see Stevie's red line. Price rejects that level. Price trades above that. We know the price oscillator is rising, even though it's below zero out here. Gives you every indication of a bottom that is in. Then you can see that price oscillator gets back above zero March 10th. Continues moving higher. Moves higher till when? Moves higher until price starts moving higher, does with less relative energy. Then Stevie's signals start forming these lines out here. You get the opposite of the hammer candle on August 6th. You get the shooting star. That was your signal that the GDX was going to start pulling back. It pulls back. Right now, it doesn't know what it wants to do. You can see it's just hovering right at the zero level when you take a look at the price oscillator. There's no real signals out here other than a consolidation that's going on as we speak right now, that being between the bottom of the TAS profile at 2071 and the top of the profile at 2535 out here. So yeah, not a lot of enthusiasm inside of the mining equities at this stage. What does that say? You know, if because we know of the correlation between them, the mining equities, and metals, until gold gives you some type of sell signal out here, you know, you have to, the only conclusion I would draw is that you sit tight if you're inside the mining equities, and you wait to see if, in fact, that price oscillator can get above zero. You do that as long as gold remains above its oscillator and change line, which, in fact, it is as we speak right now. So, Mike, I hope that assists you. Matt in Vail didn't put in a request, but we were chatting via the den earlier, and thanks for posting that volume on the 10-minute bar inside of light sweet crude. And what we were all taking a look at earlier this morning was, well, it'll be this chart here in a moment as soon as I get to it, is really this chart here with regard to light sweet crude, this showing the market profiles for the 60, for the 240, for the daily, and for the weekly. And the real focus was primarily on the 240 and the weekly. This was inside the newsletter this morning. We talked about how price is going to, we have been looking for price to get down to test that 47.23 level, which it did last week. And even in overnight trading, it's tested it. We're trading right now at 47.38. So it's not as if light sweet crude is blown out of here. But another close this week above 47.23 is another indication that it can't bust it down, that being light sweet crude. If you can't bust it down, what's it going to try to do? Try to bust it up. Bust it up inside a structure that is bullish, says price should go tag 51.39. Can it go higher? Yeah. Can it go a little bit lower? Yes. But is it going to move higher? Yeah, as long as it can't bust through a level of support. So we're looking at that. But even this morning, I said that's not going to hold. You're going to see an intraday spike down to test the profile level of 46.98. I believe that was the number. Out here, and sure enough, we did see that occur, which was earlier this morning between 6 and 10. Now, that level has held. When we take a look at this set of profiles on the 4-hour basis, as 48.93 could be some considerable resistance. If you're long light sweet crude, you certainly want to see it close above 48.93 when and if price gets up to that level out here. But what price did do is it bounced back up above the weekly profile. So that is, both of those are really suggesting to you and I that 47.23 is a very cool place for resistance. Well, now, just in the last hour, we've had a brand new market profile that formed on the 60-minute chart. 46.98 is a level of support. 47.22 is a level, is the point of control, a comfortable spot for both buyers and sellers. And 47.47 happens to be your profile high. Any close on a 60-minute basis above 47.47 starts to lean you back in towards the more bullish side of light sweet crude. It would suggest to you and I this little sucker is trying to bottom. out here. Now let's go take a look at what Matt in Vail pointed out, which was there was a nice that somebody else was looking at light sweet crude, probably looking at this exact same set of charts, and there was good volume, 22,000 contracts basically that came in between 110 and 120. This is a 10-minute chart that you and I are looking at. That's a sign of strength off of the bottom. Now, what we can see out here, just on a 10-minute basis, if we just stick with the 10-minute basis, because that's what we need to stick to, you can see the 1 to 2, A to B equals CD to the downside. Now, there was a little hammer candle that formed. We looked at the GDX. We looked at a daily or weekly chart. I think it was the weekly chart formed a hammer. Well, 10-minute chart formed a hammer candle as price was making a 1 to 2. That was done at 11:10 this morning. You had another bullish signal between the next two candles. That was a evening star, bullish engulfing. So this is really telling us that the bulls are trying to defend the price area, the bottom of which is 46.86 as we speak right now. And now you've got some buyers showing their hands, saying, "Okay, we're ready to go. We're ready to roll." Now on a 10-minute basis out here, the cool thing is that you have a brand new profile. As price was making that move, as volume was coming in, what it did was it took out the top of that box, a brand new profile where the bottom was above the prior bottom and the top was above the prior top. That is what you like to see. You don't like to see price come back in this case here, and close below 46.98. That's the current bottom of the profile, but a new profile is likely to form. So you kind of watch these things. Now, with that being said, where's price likely to head to? One set of tools that you and I could use, we could just simply go to normal retracement levels. But the other way that we could use this is go take a look at our profile levels. And we already did that in one set of circumstances where we looked at the 60-minute, the brand new 60-minute. Here we can see the bounce that we've had off this A to B equals CD has been a dead cat bounce of 0.382. So if, in fact, light sweet crude can get about 47.46, this suggests to us 47.82 is next up, then 48.09. That's just simply, and then a move of a move, getting back to 48.42. But neither event or any event or all of the events out here, light sweet crude is signaling to you and I that it is trying to form a bottom. Buyers are in there trying to fortify that, and that's what it looks like to me. I don't know what it looks like to you, but I certainly shared with what the charts are communicating to you and I, and that is black gold, Texas T. So we've taken care of Texas T. We've taken care of gold in essence. We've taken care of the mining equities. We've certainly looked at the indices out here, and it's 138. And I don't know that I have any other requests. So get those requests fired up. Send them off to me so that I can look at whatever it is that you are pondering or whatever you might need some thoughts on, maybe where there's some levels of support or resistance or whatever it might be. And if we don't have anything, we'll find something to look at. Maybe it's some of these equities that are moving to the upside, some to the downside. Hey, folks, you think we're in a bullish market now? You ain't seen nothing yet. Who sang that song? Was that Bachman Turner Overdrive? Sounds to me like the markets are going to be in overdrive. Steve Rhodes with TFNN. Hope you're right.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-Share Bull and Bear ETFs. China A-Shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's off 5. S&P is down a point. Let's go out to Philly and speak with John. John, thanks for calling. Thanks for holding. How are you doing today?
Steve, very good. I always like talking to you on Mondays to start off the week on the right foot.
Same here. Same here. Now, two things you and I are going to look at. The December soybeans, or November or December? November? December.
Correct, November.
November soybeans, and then we'll take a look at the NDX 100. So tell me how I can assist you with regard to the soybeans, what you're taking a look at there.
I have gone long these as of last Friday. You can see, looking at your weekly and daily chart, a good decline has occurred since late February.
Yes.
And I have my reasons, including too many speculator shorts in the markets, a big price decline right on top of the start of growing season, which leaves open all sorts of rally potential in the event that somewhere weather turns adverse, or at least the threat thereof.
Sure.
So that just gives you the backgrounder. My question specifically from your perspective, what price, now we're currently somewhere around 929, 827, something like that. My question is, where does price have to rally to, from your perspective, flip this bullish?
So the easy answer to that, first, if we look at this chart here, folks, and we're taking a look at the November soybeans, we're using our TAS market profiles to assist us with answering John's question. In the left-hand side, you've got the 60-minute time frame. The 240-minute is right next to it. Now, from a bullish standpoint, you like to see those green bars, and you can see on both of those time frames, you have green bars. So John's decision to go long last week on Friday is being confirmed by these two charts. In the case of the 60-minute chart, we can see that there has been a new set of profiles, two sets of profiles that have formed coming off the bottom. And that says trading above 927 and change is a good thing out here. So this is on a short-term time frame. It has shown that your decision is the proper decision. The same thing can be said about the 240-minute chart. So then when we just go ahead and we take our time frames forward, the next level that you want to be paying, and the beauty here is on the daily time frame, There's really strong support at the 919 6/10 level out there, 6/30 seconds, however this is traded. And if we take a look at it, and the reason why I say that is because both the center of the box and the bottom of the box are at the exact same price level. So that's a nice strong support out here. You would like to see this from a daily perspective sometime this week, preferably close above 932. If it closes above the 930 or call it 933 level out here, then that would suggest we then go to the weekly chart and look for our next profile and says 950 is in the cards for you. That's at least what these market profiles are communicating to you and I. I don't have the current instrument in my other system, but at a minimum, what I can do is put up the continuous contract. So it's going to have a price difference out here. I'm really not interested in the price difference. What I'm interested, folks, is in showing you a couple of different tools that John might have been looking at in taking that long position. The first is from the high in February 16th, it looks like on my system out here. If you just start doing your wave counts all the way down, you will see that it looks like last week so if this is Monday, Friday, Thursday. Last week on Wednesday, it formed that seventh wave move. And as it was doing that, price was moving lower, doing with less relative energy. And then on Friday, that's when the bull showed up. You had a nice little bullish engulfing candle that was confirming that pattern. And I think you have nailed the bottom out here. At least that's what these charts are showing me. So now it's just a matter of waiting it out to see if, in fact, that price can get above the first resistance level, 932.5, and then that would likely take you up to the 950.5 area.
Excellent. Thanks so much for all those
My pleasure.
details. And it's funny, all those bits of data that you just threw out, the wave 7 count on the daily, price divergences, and this new TAS box on the daily charts. Of course, I was unaware of any of those things, hence my call to you, but funny how that all just lines up.
It's a beautiful thing.
It's a beautiful thing. It really is.
All right. So we got that. Now you want to talk about the NDX 100.
Yeah, I just wanted to ask you this. I mean, you said right at the close of last segment, if I heard your words, something to the effect, we ain't seen nothing yet. Anyway, my question on the NDX, you and I have discussed the daily chart since the lows last November, December,
yes,
and how drawing trend lines off of swing lows keep on getting uptrend lines that are steeper in slope. In other words, and a different way to describe that is to saying this market is in the process of going towards exponential, towards vertical. This is a very rare type of behavior, but it's happened from time to time. My question is, when you say ain't seen nothing yet, do you have cause to believe the pace of price increase actually accelerates right from here? Or is that reading too much into it?
I think that it continues until proven otherwise. I have to go with the assumption that it's going to continue, and there are a number of different reasons. I won't go into all of them right now because I'm going to cover that when I do my segment with Tom at 3:15 today. But there I'll give you kind of like the full Monty of the overview as to why we need to consider that, in fact, we ain't seen anything yet. One of those things, though, there's a number of great different tools and patterns out there. One that I like, and it works on all different time frames, certainly the shorter time frames, are these consolidation patterns. And if we take a look at this chart here that I'll put up, this is the long-term chart for the NDX 100. And this takes us back in the 1997 type time frame. And we know that the NDX 100 went ahead and made a high back in 2000. And that high wasn't taken out until we got into 2016-17, this year, basically, when we had a nice confirmation. The only other thing on this chart happens to be my red line, or the oscillator unchanged line. Now, and that is really important. It's a really important tool. Now, in this place here, I'm looking at this rectangular box as being the long-term consolidation. Figure this goes from 97 to 2017. So you've got a 20-year deal out here of consolidating. And the reason why I believe that we can call this a consolidation, because the lows were tested. It certainly was a double bottom and a double top. And once you take out either of those, that's when you go ahead and take a look at your measured moves. So whether you want to call it a consolidation or a double top, double bottom, in this case here would be a double top, and it was a double top that failed and price was able to close above it, then that says that your price projection is equal to or greater than a consolidation. The exact measurement, I don't have the exact, but I'm calling it about 8,500. You and I have discussed an 8,600 level. Until price closes below on a monthly basis, that red line out there, we ain't seen nothing yet. And that's just, and I haven't even given you all the reasons, but this one's a good enough one.
Steve, thanks so much.
You bet. Take care. That was John in Philly. That's the NDX 100, folks. These markets are headed higher in a huge way. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts, and keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. So one of our dinners, Tarpon 2, wanted to take a look at the TLT. So hopefully you don't mind if we take a look at the underlying instruments first. And I say instruments because I believe we need to take a look at the yen futures as well to assist you with that trade. Now, what I don't know, I didn't see whether you were long or you were short, or you were in, you were out, you were looking to get in. And short term, please, is really what you threw out there. So I gave you the short term here. And the way that I will do that is let me come back to the actual current contract. And I'm looking at the 30-year Treasury out here. And so short term, this, if in fact, and I'll give you a level that price needs to break short term for it to pull back further. And I'll show you the level where price would likely pull back to. So you and I right now, short term, we're going to go ahead and take a look at the 60-minute chart out here. And on this 60-minute chart, what you and I know is you can see, brand new profile has formed out here. Did this at about 10 o'clock this morning, between 11, so at 11 o'clock this morning. Now, the structure of this box out here, even though it did form with a low below the prior low and the high below the prior high out here, that gives us a bit of a selling pressure message out here. But the structure of this box is actually a little bit bullish. Center, the cyan area, closer to the bottom. So what I would suggest harping to is at 155.22, that level, 22-30 seconds out there, is the area that price needs to hold as support. If it fails, then the levels that you would be looking for. Now, this is going to be a problem because in the TLT trade, this stuff could be taking place while the cash markets are closed out here, but at least you know what to look for. And the nice thing about that 155 level is we've got in essence, the exact same price point inside the 240-minute chart. So what you and I know is price is really backed up to a significant or a level of support. Well, I don't know if we can call it significant, but a reasonable enough level of support that price ought to hold here. And if it doesn't hold here, spells a further pullback. Now, with regard to the daily chart, the top of the box you can see is a 154 and 30 seconds out here, and the weekly is 154.17. So that really becomes your next level. If these areas fails, that says that treasuries would open up the kimono to maybe pull back into that area. There's one other spot that you would take a look. Now, short term though, I still say short term from a daily perspective. Inside the newsletter, I track the S&P from a long-term standpoint, from an intermediate-term standpoint. Those are always posted each and every day out there. The same thing with regard to gold, and the same thing with regard to T-bond futures out here. And so I can tell you that on a daily basis, the newsletter is long. So we take a look at shorter-term, daily stuff, what's going on a daily basis out here. And until the Treasury bonds were to close below my red line, you'll see that right now priced at 154.81 on my chart out here. I will remain bullish the Treasuries. You've got a rising price oscillator above zero. Until that level of support were to fail, there's only one message here. And that message is bullish, although shorter term, because I don't know what you meant by shorter term out there, shorter term, watch those levels that we took a look at on the 60 and the 240-minute chart out there. So I hope that assists you with that. Greg wanted to take a look at natural gas, waiting to go along. So if we take a look at natural gas, I don't know if I can do it this quick here, but I'm going to do my best. Where is it? Where is it? Son of a gun. Right there. It's right in front of me. So as we take a look at natural gas here, Greg, still waiting to go along. I think you'd still wait. I'm just looking at market profiles here. You want to see if you're going to wait to go long and you want to take a little bit of a risk at 296 or at 3.02. Folks, stay tuned. Your favorite polar bear in mind. David White's up next. Tom O'Brien, tune in at 3:15. I'll share with you some pretty cool information about where these markets are headed. Have a great Monday, folks. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com TigerTV.com under Trading Newsletters.
You're watching Tiger TV.